Roundhill's high yield ETFs have been catching a ton of attention lately, especially with their weekly dividend payouts that are giving YieldMax some serious competition. I invested in 4 of these Roundhill funds 1 month ago, and today I'm breaking down the results, including the NAV erosion, total dividends received, and my portfolio's overall performance. Let's jump right into it. We've all seen those high yield dividend ETFs popping up lately, promising massive payouts but often at the cost of price erosion. And now, Roundhill has entered the game with a few very interesting leveraged funds. The idea: capture more upside in bullish markets, but take on more risk when things turn bearish. So I decided to put this to the test. My interest in these Roundhill ETFs actually came from my YieldMax experiments. If you've been following the channel, you'll know that over the past 8 months, I've been investing in several YieldMax funds, and the results have been all over the place. Some performed surprisingly well, while others struggled with price erosion. So when I saw Roundhill entering the space with their own leveraged approach, offering more upside potential in bullish markets, it immediately caught my attention as a possible long-term play. After going through their lineup, the one thing that stood out to me most was WPAY, which was their weekly pay fund of funds. Basically, it combines all of their single stock weekly pay ETFs into one basket, so you get exposure to multiple names and consistent income every week. But I also wanted to take on a bit more risk, so I picked up 3 of their single stock funds: PLTW for Palantir, AVGW for Broadcom, and even their Bitcoin ETF YBTC, which I'll admit was more of a curiosity buy rather than anything else. So let's walk through the performance of each ETF so far. I've been tracking everything in my spreadsheet as usual, but I'll also show a few screenshots directly from my brokerage, since I know a lot of you mentioned this in the comments that you prefer seeing the real numbers. My first order went into WPAY. I opened a $500 position on September 8th, and at the time of recording this video, the fund has paid a total of $3.52 per share in dividends across the last 6 weeks. That's nearly a 7% yield in just a month and a half. I'm reinvesting 100% of my dividends on this one, and so far WPAY has actually held steady. The price is hovering around $54 per share, and I bought in around 52, and that means I haven't actually seen any NAV erosion yet, putting my total return at about 10.68%, or roughly $53 in profit. I'm feeling most confident in this position because of its diversified approach. There's one thing that's also worth noting with this one. Roundhill is waiving their management fee until September 2026, which makes it even more tempting to increase this position. Anyways, that's WPAY, so let's take a look at my next position with the Palantir Weekly Pay ETF. I opened this position on September 15th at an average price of $45.53 per share. The NAV on this one has been a bit of a roller coaster, which I expected from the single stock funds. It's moved both above and below my entry point, pretty typical for Palantir given how volatile this stock can be. Over the past 4 weeks, the fund has paid a total of $3.45 per share in dividends, which works out to roughly a 7.9% yield. That makes this my highest paying Roundhill ETF so far when it comes to dividend income. But again, these single stock ETFs are naturally more volatile. Their returns can swing higher or lower depending on how the underlying stock performs, and I expected that going in. Overall, my position is slightly down in terms of share price, but because I'm going in with 100% drip, I'm up about 6.85% from my initial $500 investment. That's around $34.25 in total. If you check this from my brokerage view, it'll actually show as a small paper loss. That's because those reinvested dividends don't appear as realized gains. But overall, I'm above my principal, and that's what I'll be keeping an eye on moving forward. Next, let's take a look at the Broadcom Weekly Pay ETF. I opened this position on September 15th at a price of about $60.85 per share, and honestly, this one stings a bit. The NAV has started to erode, and so far I've received $2.99 in dividends per share, which works out to roughly 5% yield so far. but after factoring in the NAV erosion, my position's down about 5.3% overall, or roughly $26. Now the same thing I said with Palantir applies here. These single stock funds are volatile and I expected that going in. My plan is to hold these for at least 1 year just to see how they actually perform over time, so it's still early in this experiment. That said, this position has definitely pulled down my portfolio's overall performance quite a bit. Anyways, let's move on to my fourth position, YBTC, which is Roundhill's Bitcoin weekly pay ETF. This position's a bit of a wild card for me. I don't have much crypto exposure, so I picked YBTC up mainly to have some tracking in that space. I opened this position on September 23rd at $45.45 per share. So far, the dividends haven't been great, just $1.57 per share, and the NAV has been slowly eroding. It's currently sitting around $39 per share, making this my worst performing position so far. It's down roughly 11%, or about $54 in total. Now let's pull up my summary sheet and see how all four positions tie in together. So the first thing to note here is that all of the positions are only about 1 month old, but I've been tracking each one from the exact purchase date to see how they've performed over time. Altogether, this portfolio cost me around $2,000, and in just over a month, it's returned about 5.85% when factoring in dividends. Since I'm using 100% drip across all positions, all of those dividends have been reinvested, and after that the market value is sitting at just $2,005, or 0.3% total return on paper so far, which is why the market value is sitting at roughly $2,005, or just a 0.3% total return on paper so far. What I also find very interesting is that two of these positions with WPAY and PLTW are doing very well at 10.6 and 6.8% returns respectively. But on the other side, Broadcom and Bitcoin are down 5% and almost 11%. So these positions are almost balancing each other out, which makes my total return just 0.3% or roughly $5. I also like to look at this from a monthly cash flow perspective. September was a short month since I only held these positions for a part of it, but even then it still cash flowed about 2.28%. And so far in October, with 2 payouts still remaining at the time of recording, it's tracking around 3.58%. So what do I think of these funds so far? Honestly, their performance has been pretty similar to what I saw in my first YieldMax portfolio review. The main difference is though my strategy. With my YieldMax portfolio, I take 50% of my dividends out as realized gains and reinvest the other half back into YieldMax for compounding. But with this Roundhill portfolio, I'm going 100% drip. I want to see how these funds perform when everything is fully reinvested over time. I'll keep tracking this experiment month by month, so if you want to see how this plays out, make sure to subscribe so you don't miss out on the next update. And if you enjoyed seeing some real results from these high yield ETFs, drop a like and let me know what you think in the comments down below.